the first panel of the evening, he had John Wingate up there. So for those that don't know John, John's Bank Social. He's CEO over there. They work with credit unions and other large banks to implement blockchain solutions for payments. Their Fed window's about 30 feet from my desk. So, all that being said, he said in his talk that in the next 6 to 12 months, you are going to see almost every large financial institution and enterprise out there start to use blockchain as their payment rails. And the cool thing about that, the way that he stated this, was that you would be able to use any tokenized representation of value to exchange for whatever else you wanted. So I'm in the grocery store, like you're talking about here, Joseph. I've got some Amazon stock. It's tokenized. I think it's at a good price. I'm probably going to sell some anyway. I'm going to go ahead and pay for my groceries with my Amazon stock. It's one share of Amazon stock is going to cover my groceries today. I select that in my wallet. I scan it, contactless payment. It goes Visa or whatever it's going to be. Maybe it's Ripple, XRP, swaps the pair. And then the merchant's going to get whatever they want on the other side of that transaction. If that's gold, if it's Apple stock, it doesn't matter. You need a permissionless DEX that allows anybody to exchange value that they want to give for what the other person wants to receive. It's the ultimate barter system, effectively. That is what's going to happen. And for him to say that that's going to happen in the next 6 to 12 months really kind of blew my mind, because I thought that was a little bit further out. I thought we would probably make our way into like stable coins and tokenized deposits first, and then, over time we would see the rollout of the tokenization of these other things, and then you'd have a Google wallet or an Apple wallet where you had all that stuff listed in there, and then you'd be able to like select that and pay. And I don't know if you guys remember this or not, but Digital ID, Global ID had a partnership with Uphold back in the day, and they had an XRP card. First time I ever met Ray and James Rule, we went to breakfast and I paid with my XRP card. You could hold whatever crypto you wanted over there on Uphold, and if you wanted to pay in stables, if you wanted to pay in cash, if you wanted to pay in XRP or Bitcoin or ETH or whatever you had, you would just log into the app, you'd select whatever you wanted to use, swipe the card, boom, boom. That's how I think this is going to work. I think you're probably going to have your default, item that you use to pay, whatever that's going to be. Maybe that's a line of credit against your XRP or your other crypto, right? Or whatever else you want to use. And then if you want to change it, just like you have a default browser or default whatever on your user interface on your computer or your phone, it'd be the same way for default payment. So I think that's how it's going to be. Based on what John said, he's saying 6 to 12 months, which just blew my mind. I'm hopeful for that, but I'm also, realistic. I think it's probably closer to, 24 months before we see mainstream adoption of that. I'm sure the capabilities will be there in the next 6 to 12 months, but I think for the average person to figure out how to use this and start trading their stocks for groceries, it's going to take a little bit. Chris, my man, he says, will oil price continue to go up the longer the Strait stays closed? The answer is yes, my man. The answer is yes. I'm going to take a sip of my bluey tea here. Oh, that's good. All right. Up next, we got Mark Mann. He says BOJ Deputy Governor has said he expects to shift to a more neutral monetary policy stance by continuing to raise interest rates via monetary policy rate hikes. Your thoughts? They need to raise interest rates. I mean, if you look at their 10-year bond yield, it's at 2%. It's above 2%, and their interest rates are still at 50 bips. They need to come up all the way to about 2%. That's 150 bips from where they're at. I don't know that they're going to do that in one move. They're talking about moving up a quarter bip, every couple months or so. They have just been holding since August of 2024. And they saw the volatility in the market. And so they've just held there. Same thing with the Fed. The Fed started to lower their interest rates, which we need to. Our inflation's ticking up. And employment numbers are also, We just had Block lay off 4,000 people to implement AI at their organization, and their stock price went up 23% in one day. Look, I don't agree with that. That is a trend that's going to continue. You're going to see more and more of these large organizations start to lay off people in droves to implement AI. And the unemployment numbers are going to skyrocket. The only way that they're going to be able to combat that is to lower interest rates for people so that more people have lines of credit and access to capital so that they can create more jobs and stimulate the economy. And obviously, if money is moving faster through the economy, then, that'll help also. Velocity of money would help. All that being said, though, that was wild to see.